Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are going to discuss more about long-term options. So this is more of an awareness video because most of the people are not aware of long-term options. So whenever you open stock futures or stock options, even Nifty in most of the brokers, you just find options where you can trade till 3 months ahead, which means now we are focusing on August expiry, August, September as well as October. So you don't find options much beyond that. But did you know in Nifty you can actually trade options up till June 2026. But obviously there will not be so much liquidity in these options. But what we are going to do is we are going to discuss what are the advantages of trading options which are 6 months or 1 year down the lane. So they will have some amount of liquidity and they also offer very good premiums. So before which we already have a position running and this is at a very favorable position right now, and we haven't gone much quantity today and the market is also flat, which is again something favorable. So I just thought I'll make this video while we have the trade running. So for that reason, I won't be able to post the trade review today because currently we are recording the long-term option video and this video is not being recorded. So I'll be giving you the update on the community tab. So with that being said, we'll go back to this option chain and here you can see Nifty usually comes with 7 weekly expiry options, then 3 monthly expiry options, and then you have quarterly expiring options and finally 6 months expiring options. So you can see that right over here. So now what happens is if I go to say the next quarter ending is September, right? So I can go to September 2021. Since this is quarter ending as well as month ending, so you see some significant contracts being traded here. So not quite a lot, but 17,000 and 8,000, 7,000. At strike prices, something like 16,000, 15,500, that is where you usually find most of the liquidity being driven, right? So you see some contracts being traded here. So if I come to December 2021 options, again here you see most of the contracts being traded around 16,000, 16,500, 15,500 and so on. So beyond this, if you go, there's not much of liquidity, but what you are actually looking at is till next 5 months. So August, September, October, November, December. So for the next 5 months, you're actually looking at the option chain. So the thing is, you can actually trade this options. Maybe let's say I do a 16,000 short straddle for December. So I'll be receiving a total premium of somewhere close to 550 on both sides. So approximately 500 and 550. Totally put together, I'll be receiving a premium of somewhere close to 1050 rupees. So now what is the advantage of trading this option? The main advantage is I have a very wide range. So I have a range as much as 1000 rupees in Nifty, which means as long as Nifty is within 15,000 to 17,000 in the next 5 months, I'll be making profit. But the thing is, it just doesn't end here. The second advantage what you have is that you can quite easily adjust this option, because when you have such a huge range in Nifty, that is almost 1000 point range in Nifty, so it is not pretty hard for you to actually adjust the option, right? Because if it comes towards your break even, you can quite easily shift this from 15,000 towards 16,000. So you have a lot of options what you can do to easily adjust this option trade. So that is the second advantage what you have, that is the adjustments with long-term options. So the third advantage what you have is, let's say you're actually a working professional, right? So which means you don't have a lot of time to sit and monitor the position every day. So for such people also, long-term options are going to help a lot because you don't have to sit and adjust every day. So adjustments can be done once a week or sometimes once a month, or maybe even that is not required. If, for example, Nifty is trading above 15,000 towards 16,000 from almost past 2-3 months. So if you had done a 15,500 short straddle, you wouldn't have done any adjustments for last 2 months, right? So that is one more advantage. So if you are a working professional, you can easily do a long-term short straddle, and you can quite easily do adjustments also, because the frequency of adjustments are pretty less. So this is one more advantage of trading option long term. So the next advantage is, for example, what are your break evens? For example, let's say my break even is, if I do a 16,000 short straddle, my break even will be somewhere around 14,950 as well as 17,050. So for this, I can actually end up hedging with a weekly option. So for example, I can go to 14,950 option in weekly, and when I see that it's only available for 3 rupees, and same way 17,000 option is just available for 1 rupee, which means my weekly hedging cost is just going to be around 4 to 5 rupees max. So that is going to be the max, and it's just going to be around 4 to 5 rupees. And over that, I have another 20 weeks left. So 20 into 4 is just going to be somewhere close to 80 rupees. So this is going to be my max hedging cost in case if something goes wrong. So there are multiple things to this. For example, if Nifty, for example, moves from 16,000 towards 16,500, the next week hedge will obviously be a little more expensive. So there are multiple things to this, but since it is a basic video, we will just assume this. You can actually hedge it with weekly options, and in case of any wild move, that will be protected. For example, COVID crash, let's say there is a COVID crash happening and Bank Nifty opens around 1000 points lower and Nifty opens 300 points lower, still you don't have to worry, because your weekly option will provide you very good hedge. So that is the fourth advantage in trading long-term options. So these are the major advantages of trading these options. And apart from that, for example, let's say I end up doing short strangles, I am going to get a very good premium. So for example, I can do something like say 14,000 short strangle, I am still going to get 80 rupees, and I can do a 17,000 call where I'm going to get 100 rupees, which means this is going to increase my break even further. That is, by doing this short strangle, I am already collecting somewhere close to 200 rupees, and my break even is going to come at 17,200 on the upside as well as 13,800 on the downside. In a low VIX environment where VIX is somewhere around 12 to 13, you usually don't expect a movement of 2000 points in Nifty unless the VIX actually shoots up. So considering that, this is actually a very good break even to have for December end. So if Nifty actually starts moving towards 17,200, you can definitely come towards from 14,000, you can come to 15,000, then later to 16,000. So you have lot of ways to adjust this position as well. So with that being said, so we discussed about 5 advantages of trading long-term options. 1, you are going to get very good break evens. 2, you don't have to adjust a lot. 3, you can actually hedge with your weekly options. 4, if you are a working professional, you can still do long-term options. And 5th is that you can also do strangles and get a very long break-even point. So these are the advantages of trading long-term options, because you are going to get good premiums even if you go far off. So for example, 13,000 is around 40 rupees. So if you don't expect market to go below 13,000 by December end, then this would be a really great option to short, and you can hedge it with weekly options. So this way you can actually use these long-term options to your advantage. There is one disadvantage with long-term options. Actually, there are a couple of disadvantages with long-term options. The first thing is, if you go more than 9 months, so this doesn't have the problem because it's just 5 months away. If you go more than 9 months away, the margin required will be double. So if you go, for example, for December 2022 option, whatever is the margin required for a normal option trade, that will be double. But in this case, that won't be a problem because this is well within 9 months. So the margin double. And next disadvantage is, in case the volatility increases or IV or VIX increases, long-term option premiums are going to shoot up much more than short-term option premiums. So effect of IV is more on long-term options. So these two are major disadvantage with trading long-term options, but the thing is you have much better advantages in trading options, long-term options. And one more advantage as a buyer is that you are not going to have lot of theta decay. So first we only discussed advantage for seller, but as a buyer you don't have lot of theta decay with long-term options, because currently 16,000 call option is trading somewhere close to 500 rupees, which means this 500 rupees is going to get eroded over the next 5 months. But if Nifty actually ends up shooting above 16,000, this is going to easily become somewhere close to 600, 700 quite easily. So that is one advantage as an option buyer, because the effect of theta is very low. The second advantage what you have as an option buyer is when the VIX or IV increases, it is going to affect the long-term options the most compared to short-term options. So that is the second thing in your favor. So no theta, and you have the highest effect of IV or highest effect of premium increase due to IV. So both of this put together, as an option buyer, again long-term options are going to benefit you. And finally, the last advantage is if you are hedging your portfolio, and again your long-term options are going to benefit you because the theta decay is very low and IV is very high. So with all these advantages, you can actually check out long-term options if you're a working professional to do short straddles or short strangles, or if you have any option buying strategy, or if you have a view on Nifty for longer term, or let's say you have any option buying strategy or view on Nifty for longer term, again you can definitely check out long-term options, because the theta decay is very low for long-term options and you are going to get very good effect of IV. So IV increase will actually push the premiums higher. And finally, the last and the most important thing is you can actually also use this to do calendars. You can use these December options to do calendars with your month-end options. So that is also one more advantage what you have. So many people actually prefer doing calendar spreads with long-term options. So you can check out that as well. So not many brokers actually offer this. Few brokers do. And the broker that is Firstock, even they actually offer this long-term options. So if you just go to the market watch, and if you just type in NFO and Nifty here, so here you can see that I can select expiries till 2026 June. So I can go to December 2021 and I can pick a strike of 16,000 call option, and that will be available here. And you can see that the liquidity is also okay. It's not very bad. You have small spreads of around 4-5 rupees. That is pretty fine, and that's on expected range also. So this way you can definitely try out long-term options, and you can also ask your broker to enable long-term options. And one more thing, you can also try out Firstock, where you can open a free account and get your first 100 orders free if you don't have a demat account, and the link is in the description. This is just an introductory video on basics of long-term options, what are long-term options, advantages and disadvantages. Next we'll be coming out with a video on what strategies you can use with long-term options, and you can actually benefit out of that. So with that, we come to the end of this video. And if you're liking the content on this channel, please do hit the like button, share as well as subscribe. Thank you so much for joining, guys.